All right. Good morning, everybody. Good morning, everybody, and happy Monday. Today is 11/11. It's Monday once again. Happy Veterans Day, by the way, before I forget. Thank you for your service to all the veterans out there. We have got kind of a slow news day going on today here, guys. The stock market is open, but the bond market is closed for the Veterans Day holiday. But still, we do have a couple of big stories are going on this morning. While we were all enjoying our weekend, the price of Bitcoin went bonkers, gangbusters, whatever you want to call it, to the moon, hodlers, all those silly cliches. The price of Bitcoin rallied more than $5,000 over the weekend, reaching a new all-time high at one point, touching as high as $82,300 per Bitcoin. We are definitely now broken out of that bull flag consolidation that we've shown on this channel for quite a while here. And the FOMO is setting in once again. We've got Michael Saylor has discovered the infinite money glitch where he issues shares of MicroStrategy or he borrows money against his Bitcoin, uses that money to buy more Bitcoin, sending the price of Bitcoin higher, which increases the value of those MicroStrategy shares and allows him to borrow more against the Bitcoin. It's the infinite money glitch, and that works until it doesn't, right? So as we set in for the FOMO and the enthusiasm starts to set in, be careful, everybody, all right? First of all, I own Bitcoin. I buy Bitcoin on the regular. I try not to trade around it. It's just too volatile, and I'm just not that good of a trader. But we've seen this before, right? The FOMO sets in and the price goes vertical. And I've been saying it for a few weeks, guys. It's not a hallucination to imagine we could see $100,000 Bitcoin before the end of this calendar year. It could happen. In the last couple of weeks, we're on pace for that to happen, as a matter of fact. But we know how this ends, right? The price rallies, the FOMO sets in, the enthusiasm goes crazy. The fact that people are just blindly buying causes frauds to take advantage of that enthusiasm, and they start to develop these big, elaborate conspiracies like FTX, like OneCoin, like BitConnect. Inevitably, the FOMO subsides, the frauds are exposed, a lot of people lose a lot of money, and the price crashes. Rinse, repeat. We've seen this several times now. This is not the first time it's happened. This is part of the normal Bitcoin halving cycle. Typically, the price of Bitcoin rallies like crazy for about 18 months after the halving, which was in April. So we've still got plenty of time left in this halving cycle. But as always, guys, as they say, Bitcoin is the Wild West of finance. And all the people who went west chasing their dreams during the big expansion in the gold rush, the ones who didn't plan for winter didn't survive. So just make sure you've got a plan for a winter. And that's as much of the poo-pooing of this rally I'm going to do. Everybody else, just enjoy the higher prices here. Also going on this morning, guys, we need to talk about Warren Buffett and his gigantic freaking pile of cash. It just keeps getting bigger. How big? It's funny you should ask. $325 billion big. And this article in the Wall Street Journal this morning does a very good job of putting that in context. Oh my God, the amount of cash that this company is sitting on. So is that a good thing? Well, not if you're piling into stocks right now. It's not a good thing. All right. You don't sit in cash, $325 billion of cash, if you think the value of things is going to go up. No, you sit on a big pile of cash like that if you think the price of things is going to go down, because you'd rather own the cash and buy more of it after it goes lower. Look, this is the biggest allocation Berkshire has ever had on a percentage basis, on a nominal basis. He's still selling his stakes in Apple and Bank of America. He's selling indiscriminately here, guys. And honestly, I think what it is, I think what Warren Buffett is telling us is higher rates are here to stay. I know the Fed is cutting. You're right. The Fed is cutting. They just cut last week again. But you guys have seen what interest rates have done since interest rates started falling, haven't you? Interest rates have done nothing but go up since they started cutting rates. Or as I've said several times, interest rates are going down. Somebody forgot to tell interest rates. I think Warren Buffett can see it. Warren Buffett was one of the only investors that was even alive during the last period of consistently higher interest rates. Maybe he's the only one who can remember, who can tap into that memory and realize what's coming. We also got some movement in oil this morning. Oil's a little bit lower on disappointment over China stimulus. China announced a $1.4 trillion bailout of local government finance vehicles over the weekend, and it wasn't enough. I'm going to repeat that because I feel like some of you maybe aren't taking the walk with me. $1.4 trillion, not yuan, mind you. It was like 10 trillion yuan or something. $1.4 trillion is not enough. You better own some gold. That's all I'm going to tell you. Gold is down here this morning, is not participating in this Bitcoin rally. But when you hear stories about $1.4 trillion and the market is disappointing, saying, gosh, I wish they'd just give people $1 trillion of helicopter money so we could stimulate demand. In other words, drive people to consume with printed money. Gee, what happens when you do that? Oh, that's right. We all just lived through this in the United States. We know exactly what comes next. Inflation comes shortly after that. You better own some gold, guys. If they're sitting there saying 1.4 trillion ain't enough, we got bigger problems on the horizon. Also, China's trade surplus just hit $1 trillion. They are exporting $1 trillion more than they're importing. Now, that might sound like great news, and from certain perspectives, it is great news. But I think one of the reasons why China's trade surplus is getting so big is because domestic demand in China is so awful. The Chinese consumer is so broke because he's watched his life savings go up in smoke in the property market that he's just not buying anything. And so China's not importing anything. They're certainly not importing very much oil. And so you're seeing that trade surplus blow out. It's mainly because of lower consumption here. Also, the weaker Chinese yuan is playing a big role there. And there's even some talk about India and China and some currency frictions, possibly a currency trade war going on between India and China. Pay attention, BRICS guys, currency problems between India and China. I thought they were going to go on the same currency and they were going to dethrone the dollar and all that stuff. Well, again, it's easier said than done. And last but not least, Japan is coming out with their version of the CHIPS Act. Rumor has it there is a $65 billion aid package underway in Japan to stimulate domestic production of advanced semiconductors for artificial intelligence. Guys, so many different countries are going to do this. They are going to flood the market with chips. They're going to build so much of this stuff that they are going to be selling them out of the back of vans in Chinatown any day now. They're all ready for sale on eBay and even Facebook Marketplace. I shit you not. Why don't we shrink my big melon of a head and let's see what's going on in the market today, shall we? Guys, if you could, that like button for the algorithm, it really helps me out. And if you're new here, hit that subscribe button and come have your coffee with the melon heads as we go through markets every single day. Right now, the S&P is in positive territory, albeit by a small margin here. Up about 20 points this morning, 0.35% higher. It gave back a lot of its earlier gains. I'm not sure what this volatility was here between 7:30 and 8:30 this morning. There was no big data or earnings or anything like that. The Dow, meanwhile, is up 171 points or 0.39% higher. That's looking like a new record opening for the Dow. And the NASDAQ is higher by 63 points or about 0.3% to the upside. So stocks up across the board here this morning. We've also got a stronger dollar. Once again, another 58 basis points, 105.58 for the U.S. dollar. Looking over at the bond market, guys, not a lot to say here because the bond market is closed today. It looks like we got a little bit of trading going on in the 10-year here. That's up about 3.5 basis points at 4.346. Not going to go through the other ones because it is unchanged from last week. Now, looking over at the commodities board, we got a lot of red here. That stronger dollar is weighing on commodities here. Gold not looking so good once again this morning, $2,630 for spot gold. Again, when I say not looking so good, that is in the context of just a few days ago, we were threatening to overtake 2,800. So still looks great if you zoom out on the chart, but we're down $54 here or 2% lower. Again, guys, any of this short-term decline in gold here, I think, is a blessing in disguise. When you see stories in China of 1.4 trillion in stimulus not being enough, that's usually an indicator that you probably want to own a little bit of gold there. Spot silver, meanwhile, is also taking it on the chin this morning, $30.68. That's off by about 60 cents or almost 2% lower for silver as well. So metal's just not having a good morning here. Copper's down about 0.75%. Platinum is up 0.33%. Palladium is unchanged here. WTI crude oil, meanwhile, down $1.71 or 2.4% lower, trading at $68.66 a barrel for December WTI futures. We will cover oil in more detail later on. But first, We got to talk about the big one here. This one in Bloomberg this morning. Bitcoin soars above $82,000 as Trump win boosts crypto prospects. President-elect Trump's crypto ardor is energizing the market. Oh, look at the big vocabulary over at Bloomberg. Ardor, that means enthusiasm or passionate feelings about. So Trump's crypto ardor took us to 82,000. Who had crypto ardor on their 2020s bingo? Digital asset traders predict a friendlier regulatory backdrop. Bitcoin rallied past $82,000 for the first time, boosted by President-elect Donald Trump's embrace of digital assets and the prospect of a Congress featuring pro-crypto lawmakers. Trump was declared the winner in Arizona, making a clean sweep of the 7 U.S. battleground states. His decisive victory in the presidential election has prompted celebratory chest thumping from the digital asset industry, which spent over $100 million backing a range of crypto-friendly candidates. The largest token climbed as much as 6.1% on Sunday and extended gains to hit an unprecedented $82,300 on Monday as of 10:21 a.m. in London. Bullish sentiment lifted smaller coins too, including Dogecoin, a meme coin favorite promoted by Trump supporter Elon Musk. They're talking about Trump's agenda here. Trump vowed on the campaign trail to put the U.S. at the center of the digital asset industry, including creating a strategic Bitcoin stockpile and appointing regulators enamored with digital assets. Jubilant traders for the moment are paying little heed to questions such as the speed of likely implementation or whether a strategic stockpile is a realistic possibility. Now, I do think it is a realistic possibility, and it's actually a really good idea. The countries that have developed their own strategic stockpiles of Bitcoin are doing incredibly well having done so. Now, the other thing I want to mention here, guys, is they keep saying a strategic Bitcoin stockpile, and they use the word stockpile later on, whether a strategic stockpile is a realistic possibility. They're not using that word by accident because they don't want to use the other word that's being used to describe this exact thing, a strategic Bitcoin reserve, or whether a strategic reserve is a realistic possibility. See, Bloomberg and the legacy finance media don't want to use that word because they don't want people getting their idea in the idea in their heads that Bitcoin might be considered a global reserve asset, but that is exactly what it is. And guys, we're hearing all this talk about BRICS and why doesn't BRICS have its own currency and they could back it by gold and they dethrone the dollar? It doesn't really work that way. There is already a solution that does exactly what BRICS is talking about doing, and it's Bitcoin. It's something that you can easily move into or out of with any currency in the world. It makes perfect sense. There's already an infrastructure network out there available to it. And if maybe this is one reason why we're seeing Bitcoin run so much here. If the U.S. were to start building a strategic Bitcoin reserve, you're talking a lot of buying pressure. Look at how much the price ran up on the ETFs and the institutional money getting into Bitcoin. If central banks or treasuries started doing the same thing like El Salvador has already started doing, you better believe that's going to send that price sharply higher. And by the way, Michael Saylor from MicroStrategy, here's out with this one this morning. MicroStrategy has acquired 27,200 Bitcoin for $2.03 billion at about a $74,463,000 per Bitcoin price. So Saylor is out there buying again. I'm sure MicroStrategy was one of the players that was buying this weekend. You can see here on this chart here, guys, daily candles. We had a lot of movement over the weekend here. That was your Friday and Saturday. Big buying going on there, basically doubling the move that they made after Trump's election win. So the FOMO continues here. We're just below the highs. The high was about 82,300. We're sitting here at 81,900 at the moment as priced on Coinbase, but up several $1,000s once again. And guys, again, just a reminder, not trying to poo-poo the party, but we got this story from this morning as well. FTX sues crypto exchange Binance and its former CEO Zhao for $1.8 billion. Just a reminder of what might emerge from the crypto ecosystem over the next few months. You've got FTX, whose CEO is currently in jail, or whose former CEO and founder is currently in jail, is suing Binance, whose founder and former CEO just got out of jail because when FTX bought out Binance, they did it using Alameda's fake money that was stolen from customers. And so the people who have been appointed to try to clean up the mess at FTX are now suing Binance, saying that transaction was illegal and we want to claw back the money and give it to the people who it was stolen from. I don't really have an opinion one way. These two companies can kill each other in court for all I care, because I don't like either one of them. But it's just a reminder, guys, of what comes next. Yes, Bitcoin price is probably going to continue to FOMO rally for several months, but sooner or later, there's going to be another Binance. There's going to be another FTX, another BitConnect, another Mt. Gox, another OneCoin. There will be another fraud that crashes the price. Make sure you plan for that and be careful with your leverage. Now, let's talk about the Oracle of Omaha, Mr. Warren Buffett. This one in the Wall Street Journal this morning. Guys, Warren Buffett's cash pile is getting a little ridiculous. It needs to chill TF out. Does Warren Buffett know something that we don't? All right, spoiler alert. Yes, he does. Warren Buffett knows a lot of somethings that we don't. But does he know something specific here? Something about maybe the direction of the market? I don't know. But Berkshire Hathaway is hoarding cash in a pattern seen before the financial crisis, but it has a new reason this time. When the world's most followed investor doesn't feel comfortable investing, should the rest of the world be worried? Warren Buffett, who has quipped that his favorite holding period for a stock is forever, continues to have substantial money at work in American companies, but he has never taken this much off the table either. A whopping $325 billion in cash and equivalents, mostly in the form of treasury bills. To appreciate the immensity of that hoard, consider that it would allow Berkshire to write a check with change left over for all but 25 of the most valuable listed U.S. corporations. Iconic ones such as Walt Disney, Goldman Sachs, Pfizer, General Electric, or AT&T. He could buy them for cash outright, every single one of them. In addition to letting the dividends and interest pile up on its balance sheet, the conglomerate has been aggressively selling down two of its largest shareholdings, Apple and Bank of America, in the past several months. And for the first time in 6 years, it has stopped buying more of the stock it knows best, Berkshire Hathaway. They're not even buying their own stock. So what does Warren Buffett see? Well, first of all, guys, you got to appreciate the scope of this thing. Now, there's no point in even talking about this in nominal terms, because this chart would be just impossible to even view in context. All the past years would just disappear. So let's talk about it in terms of percent of holdings. Shout out to my moderator, Mish, who found this chart here. This is Berkshire Hathaway's cash position as a percentage of total assets. All right, so this isn't nominal values. If this was nominal values, it would look like a hockey stick, just straight up. But when you look at it in terms of percent of assets, you can see, guys, the only comparable time in history when Berkshire has raised this much cash this fast as a percentage of their total holdings was between 2000 and 2006. That's the only time they've ever sold so much stock. And of course, what happened shortly after 2006? Oh, Bear Stearns and then Lehman Brothers and then AIG and Fannie and Freddie. You know what comes next here, all right? So what does Warren Buffett see on the horizon? I think it's pretty clear what Buffett sees coming. Now, another thing I want to talk about, and I was talking about this on DNN with my friend Melody Wright over the weekend. Take a look at this chart, guys. This is the 10-year U.S. government bond yield. All right, and this is a way long-term chart. This goes all the way back to the end of World War II here, shown on this first red line here. All right, so these are like 40-year periods. After World War II, and pretty much until the closing of the gold window by Nixon, several years after the closing of the gold window, interest rates did nothing but rise in the United States. There was periods of slightly lower rates, but the trend was higher for about 40 years. And then for most of the time we've been alive, interest rates have done nothing but go down since the 1980s, since the Volcker days. Every time things got tough, the Fed lowered rates, and when that wasn't enough, they lowered rates and printed money. And, well, it seems that worked right up until it didn't, because shortly after COVID, we had the period of inflation, and now, look, interest rates have started rising. Maybe what Buffett sees is this happening all over again, because Warren Buffett is one of the few people in Wall Street who was even alive during the last time interest rates moved consistently higher over long periods of time. Every single person in finance, almost all of them, they're in their 20s, their 30s. Maybe some of them lasted into their 40s. This is a young man's game. There aren't many guys like Buffett around. None of the guys running any of these other firms have ever lived through a period of sustained high interest rates. And if you think about what interest rates really are, take a step way back. Interest rates is the price of money. If you think the price of money is going to go higher, then you want to hold money, not other assets. So it makes sense that Warren Buffett is guessing interest rates are going sharply higher here. All right, now let's talk a little about oil in China. U.S. oil benchmark falls back below $70 a barrel on China stimulus disappointment. Oil futures picked up Monday where they left off at the end of last week, under pressure following disappointment out of news from China, the world's largest crude oil importer. WTI fell 2.7% and Brent shed 2.3% on Friday, trimming last week's gains after China announced 1.4 trillion yuan. I'm sorry, that's about 195 billion. I'm not even sure that was accurate. Package aimed at shoring up local governments that left investors underwhelmed. Guys, it was actually $1.4 trillion. It was a 10 trillion yuan package. It was freaking huge. And the market said that's not enough. They yawned at it. Data over the weekend showed China struggling to overcome deflationary forces. The consumer price index rose 0.3% in October, slowing from their 0.4% the previous month. Economists polled by Wall Street had looked for a 0.4% rise. The producer price index, meanwhile, suffered a 2.9% decline, its 25th straight monthly fall, and larger than the 2.6% drop expected by economists. Along with Friday's announcements about local government debt, which were once again deemed as insufficient by the market, Chinese economic momentum remained negative, said Achilles Georgilopoulos, that's a mouthful, an analyst at XM, in a note. Now, they're going on here. Well, first of all, let's just look at the oil price here, guys. You can see daily candles, two big drops in a row here. Oil prices just way down, $68.44 for WTI crude. We are at the lower end of this range we've been in for most of this year, threatening to break down here. It looks like oil could be headed for the 50s here. That is if OPEC has anything to say about it. OPEC's probably going to increase production at the end of December. Increased production would almost certainly send oil prices lower into the next tier down, which would be somewhere in the 50s, my guess. And we got this one from China also. China nears a record $1 trillion trade surplus as Trump returns. Exports to nearly 170 economies top what China buys from them, and the wider surpluses with the U.S., the EU, and Asian countries stirs fears of a trade war. China's trade surplus is on track to hit a fresh record this year, increasingly leaving it on a collision course with some of the world's biggest economies by aggravating an imbalance in global commerce that risks provoking President-elect Donald Trump. The difference between Chinese exports and imports is set to reach almost $1 trillion if it continues to widen at the same pace as it has in the last year to date. That's according to Bloomberg calculations. The goods trade surplus soared to $785 billion in the first 10 months, according to data released this week. That's the highest on record for the period and an increase of almost 16% from 2023. With Chinese export prices still falling, export volume growth was enormous, said Brad Setzer, senior fellow at the Council of Foreign Relations on X. The overall story is of an economy that is again growing off of exports. China has been relying more on exports to compensate for the weakness of domestic demand that Beijing has only recently tried to redress by injecting stimulus into the economy. So it's the slowing imports that's really driving this big growth in the China's surplus here, because there's just no domestic demand. The Chinese consumer is really hurting here. The increasingly lopsided picture has generated pushback from a growing number of countries, and the new Trump administration is likely to impose tariffs that would reduce the flow of exports to the U.S. countries from South America to Europe, who have already raised tariff barriers against Chinese goods such as steel and electric vehicles. Now, besides the tariffs and besides the shrinking China demand story, there's also some Forex talk going on here at the end of the article, and you can almost always find some good tidbits hiding in the last paragraph or the last few paragraphs of a Bloomberg article here. Imbalances are also growing with many other nations. China now exports more goods to almost 170 countries and economies that it buys from them the most since 2021. A currency war may be brewing as well. India's central bank has said it's ready to let the rupee weaken if China lets the yuan drop to counter U.S. tariffs. A falling yuan would make Chinese exports cheaper and could further widen the surplus with India, which hit $85 billion so far this year, 3% higher than in 2023 and more than double the level from 5 years ago. Now, guys, they're talking there about, what did I click on? They're talking about possibly a currency war between China and India. So China and India are the two largest economies in the BRICS bloc. A currency war between those two, I'm just going to go out on a limb here and say that might put a damper on prospects for a new BRICS gold-backed currency. So once again, that's something to keep an eye on there. To find that hiding in the last few paragraphs of the Bloomberg article, that's one worth keeping an eye on here. Taking a look at Chinese stocks here, guys. The Chinese stock market was up a little bit last night here, about 2/3%. We're kind of hovering. Looks like it maybe resumed its climb, but I just want to zero in here, guys. Look at this one, that big red candle. That was the disappointment in that $1 trillion stimulus over the weekend. Again, when the central bank announced they're going to monetize $1 trillion worth of local government debt, you'd think that would propel stocks higher, but that is how hopelessly dependent on easy money this market has become. And speaking of easy money, one more thing to keep an eye on here. Japan to propose $65 billion plan to aid the domestic chip industry, the draft shows. It looks like China wants their own version of the CHIPS Act. Japan's government will propose a $65 billion plan to boost its chip industry with subsidies and other financial assistance over a period of multiple years. A draft seen on Monday by Reuters showed the plan, with financial support worth 10 trillion yen, that's about $65.1 billion, comes as countries look to strengthen their control over chip supply chains after global shocks, including trade tensions between the U.S. and China. Japan's government intends to submit the plan, including bills to financially help mass production of next-generation chips, to the next parliament session, the draft shows. It specifically targets chip foundry venture Rapidus and other suppliers of chips for artificial intelligence. Rapidus is headed by industry veterans and is targeting mass production of cutting-edge chips on the northern island of Hokkaido from 2027 in partnership with IBM and Belgium-based research organization IMEC. So another country looking to subsidize even more chip production. This is right as the United States is doing the same thing with the CHIPS Act, and Intel is taking their sweet time building those factories in Arizona and New York. Guys, the world's first and third largest economies are directly subsidizing the production of more advanced semiconductors. They are going to flood the market with supply. There are going to be so many of these things. And my moderator, Mish, and I were just talking this morning about a story, it didn't quite make the cut, about Brazil's farmers and how a few years ago there was this new financing innovation going on in Brazil, and they created ways to securitize future cash flows from agriculture operations and borrow against them in order to stimulate more crop production because the price of grains was spiking in 2022 after the Russian invasion. Well, the higher prices led to this big boom in production, and that boom in production led to increased supply, which crashed prices, and now bankruptcies among farmers is at an all-time high in Brazil. They're going to do the same freaking thing with chips here. They're going to produce so many of these things. This space is going to become so heavily commoditized that the price is going to crash. This bubble is going to pop. Mark my words. Probably not today, though. So in the meantime, enjoy another all-time high brought to you by Easy Money. And I just want to say thank you so much, sir, to Mishra. Hey, Mish, thank you, buddy, for the 5 Nobody Special Finance memberships. Appreciate everything you do for the channel, Mish. Guys, if you got one of those memberships, say thank you to Mish the Mod. I appreciate that very much. And Nashville Pasta Man. What's going on, Pasta Man? He says, Michael Saylor, you are the egg man. I don't get the reference. You are the egg man. Is that a Saylor quote? I'll be honest with you, Pasta Man, between that and Sade the other day, man, everything's going right over my head lately these days. Look, Michael Saylor, the guy kind of gives me the creeps. Michael Saylor has got a shady background. He's gotten in trouble with securities regulators in the past. What he's doing, the way he's borrowing against his Bitcoin to buy more Bitcoin, propelling the price of Bitcoin higher, allowing him to borrow even more against his Bitcoin or issue more shares to buy more Bitcoin, right? It's an infinite money glitch. Infinite money glitches work until they don't. So I think Saylor, he survived this most recent winter, just barely, right? There was a lot of talk about Michael Saylor getting liquidated in the aftermath of FTX. The price of Bitcoin got dangerously low, almost to trigger that point where Saylor would have been forced to sell, and that would have absolutely cratered Bitcoin. I was hoping that would happen because I planned to buy more if that happened, but it didn't. Saylor just made it through the skin of his teeth. You got to plan for winter, guys. That's all I'm going to tell you. You got to plan for winter. Eggman is a Beatles reference. Okay, thank you, M&J. I did not know that, but thank you, Pasta Man. I appreciate the super chat, the support of the channel. And Harmon Air LLC, thank you. He says, don't forget to lick that ice cream before it melts. Happy Veterans Day. I'll be honest with you. Is this another reference? I don't know. Is that a Biden chocolate chip reference, or is that like, hey, enjoy Bitcoin rally? This ice cream is going to melt and the price is going to crash again eventually. It's probably going to do that, but I think it's going to go a lot higher before that happens. Either way, man, guys, I am just about as sharp as wet leather this morning. I don't understand any of these comments. I'm sorry. But thank you so much, Harmon LLC, for supporting the channel. And thank you to Charles Coughlin. Says, I choose to believe that a massive reduction in government spending would grow GDP, Laffer curve style. Yeah, the whole thing, GDP pretty much is government spending at this point. We've got roughly 2.5% gross domestic product growth. And right now, government deficit spending makes up about 7% of gross domestic product, which means if you take away increases in government spending, the economy is shrinking. Now, I would agree over the long haul, over a long period of time, reductions in government spending would result in more efficient allocations of capital, which would result in more productive investments, which would more sustainably grow GDP over time. That being said, breaking the addiction to easy money is going to be violently painful for this country. Eventually, we're going to have to do it. I'd rather do it sooner rather than later, preferably before my kids grow up and get ruined by it. So I think eventually, you're right. Eventually, reductions in government spending would grow GDP, but we got a lot lower GDP between here and there. Thank you very much, Charles Coughlin. And thank you, Charles G., the other Chuck. He says, I know it's off topic, but how do people like Elon pay off loans against stock when they use those loans as income, or am I misunderstanding how that works? Well, the big thing is the tax benefits, right? When you live off of borrowed money, you don't have any income. Actually, the interest that you pay on that debt is tax deductible, so your taxes go down. It allows you to just basically live that lifestyle without paying taxes. Now, eventually, you sell the stocks, right? Eventually, you got to sell your stuff or pass it on to somebody. Now, when you sell it like he did to buy Twitter, it comes with a big tax bill. Elon Musk paid something like $12 billion in taxes when he sold Tesla stock to buy Twitter. I mean, that's a single tax bill was almost enough to build a freaking aircraft carrier. That was a big freaking tax bill. What is he saying? Loans as income, or am I misunderstanding how that works? No, you're not misunderstanding how that works. But the key there to making that work, and this may or may not apply to you, Charles, is to have many, many billions of dollars of assets. That's kind of a big caveat there. Like if you don't have billions and billions of dollars of assets, probably doesn't apply to you. But that's how they do it. It's really the tax benefit. If you never actually sell, you never realize the gain, you never have any income, and the interest you pay on those assets becomes tax deductible. And M&J saying, did we ever get anything substantial from the CHIPS Act? Not yet. Most of the CHIPS Act money still hasn't been spent. Now, I can tell you the CHIPS Act money, just the government dangling that in front of Wall Street, has caused other money to get spent. Other companies have announced plans and have broken ground on factories and started the work, hoping to cash in on those government incentives. But like there was a lot of talk earlier this year, even just like as recently as a month ago, Intel still hasn't gotten the check from the government for the CHIPS Act money for that foundry that they're supposedly going to be building in Arizona, because Intel still has not provided the due diligence to the government that they need to bless it off. So I'm starting to have my doubts, M&J. I'm not going to lie. I'm starting to doubt whether or not some of that money ever will get spent. Rumor has it Trump may target the CHIPS Act as a way to reduce government spending. Now, I'll be honest, my personal opinion is the CHIPS Act, of all the things the government blows money on, I think the CHIPS Act was actually money well spent, especially because of the vulnerability with the military. If all of our chips that are needed for our missiles are made in Taiwan and Taiwan goes boom, then we can't make missiles, which means we lose. So I do think we need a domestic chips industry. And while I'm generally opposed to government subsidies of anything, I can see the benefits. It resembles defense spending. I think that was the real motivation behind the CHIPS Act, is it was defense spending. It was military spending. Now, if military spending just happens to grow GDP, I mean, sustainably grow GDP, then that's good. But the problem is I see everybody doing the same thing. If the U.S. and Japan and Brazil and India and all these other countries, and the Middle East is doing it too, if they're all trying to build and subsidize their own domestic semi-manufacturing, that means there's going to be too much semiconductors and the prices are going to crash. Thank you very much, M&J. Also, thank you for the clarification that Eggman is a Beatles reference a little before my time. I was born in 1980. But thank you very much, M&J. And thank you, everybody, for having your coffee with the Melon Heads this morning. Thank you guys for the super chats and the support of the channel. I appreciate that very much. Also, thank you to my Patreon supporters and magnanimous Melonheads on YouTube. You guys are awesome. Links down below to all that good stuff, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Till next time, live small and dream big.